Hi, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 22nd of August here on Share Talk. Starting off with the stock which I haven't looked at for decades probably, Laura Ashley. A bit of interest here in the sense that we've got the potential W-shaped reversal going on obviously the right-hand side of that. Want to see an end-of-day close above the 200-day moving average, really to feel safe, obviously after the failure that we saw in May and obviously given the retail woes in general. If you're keen, you'd be long of the stock well above the 50-day moving average at 4.43 pence, and this broken falling wedge line, indeed the falling wedge, is the reason for the interest here at the moment. Best case scenario is that above the 200-day line we head back towards 8p. Moving along to the more usual fare today, on to stock which I don't think I've covered here before in the Bulletin Board Heroes. Deltex Medical looks as though we've got a falling wedge gapped up through within that. We haven't actually broken out of it, but obviously the best ones are where you anticipate correctly that there's going to be a snap through the falling wedges we had at Reddit Technology a couple of weeks ago. Situation here is that looking for a move up to the 200-day moving average at 1.42 pence, even if the ongoing downtrend here doesn't break. Obviously the stop loss below that support line there from January running towards the 0.6 or 0.7 pence area. On the bulletin board today, Edenville probably the top of the pops as far as the gossip is concerned. Still looking okay in terms of recovery. We had the vertical move here, sideways shuffle, and still consolidating that vertical move that we had in June. So in a way, there's no negatives here while we're above the 0.25 area. Ideally, though, we break back above the 200-day moving average at 0.42 pence to end the extended bear run in this stock. A stock which maybe is not so weak in terms of the technical setup is Game Digital. Here it looks as though we have a falling wedge, or at least a triangle breakout in the making, up above 35 pence on an end-of-day close. We should see a reasonable breakout here as the shares snap higher after the higher August support versus March. Stop loss obviously 27.28 pence, and the target initially through the 200-day line up towards sort of 45 pence, taking us towards the April peak. Obviously, if you're cautious, you wait for that resistance line there from January to break first. Star is the next stock, Starcom. Here it's been a long and arduous process in terms of the recovery. We had the big move higher October to February. Since then, really 3.5 pence capping the price action. Quite interesting at the moment in the sense that we've got the both the 50-day and 200-day moving averages rising. That normally is it's the equivalent of golden cross, so normally quite a positive thing to happen. But it's still all about breaking 3.5 pence, as I think I said last month. So looking for a 5 pence target. If we can break 3.5 pence convincingly. Ideally, there's no break back below the 50-day line at 2.7 pence, and that would be your notional stop loss. Another situation which seems to be brewing in terms of a falling wedge comes in the form of Techfinancials. Obviously, it's been a horrible time for the shares after that push, the vertical push in December, but into this funnel now, and looks as though we're going to break out pretty imminently. What's that? 6 pence, 6.25 pence, the resistance area. If we can break that, then obviously we could get a decent move towards the May resistance zone of 15. Nice bullish divergence there as well in the RSI window. Onto a couple of old favorites to finish off. Thor Mining breaking this wedge pattern and heading towards the 200-day line. Still hasn't quite been able to break above the 200-day moving average. What's that? 2.39 pence. So end of day close or end of week close above that should give us the long promised, very long promise now, 4.5 pence target, which was the February resistance area. Finishing off with one of yesterday's heroes, and one which is continuing to move. This shows you really how good a falling wedge can be when it works, I suppose. So the earliest you could have got in there probably was around 2 pence if you'd drawn the converging lines. Otherwise, a break of the top of the formation or above the 50-day average. Currently looking towards the main resistance area here at 4.5 pence. It'd be very surprising if the shares don't easily clear that and head even higher, or possibly up to the 6p we saw in the autumn of last year. Stop loss at this stage back below the 50-day moving average, 2.62. That's it from me. More updates tomorrow.